What's up, guys? Hope everyone is doing well, at least as well as you could possibly be doing after the chaos that ensued a few days ago on October 10th, with somewhere around likely over $20 billion being rapidly, honestly, blindingly, almost like the strike of lightning, liquidated from the cryptocurrency market, affecting somewhere around 1.6 million or more traders. And to me, looking at all the information I've seen, this clearly appears to be some sort of a manipulation event, where behind the stage curtains of the drama that we all partake in, sociopolitically, economically, there are some illicit activities, it appears to be going on behind the scenes that caused all of this. Because not only, clearly, this is a historical liquidation event within the cryptocurrency space. I mean, it's comparable to March of 2020, just to bring up this specific one because this is one of the worst ones we've seen. There's obviously with the Luna crash, FTX going down as well, but even going back to March of 2020, clearly in the charts, that drop percentage-wise for the asset of Bitcoin and other assets was, upwards to around 60-70% or so. Obviously, depending upon what asset you're looking at, I believe for Bitcoin it was somewhere around 60% or so, maybe like 40 to 60%. I don't quite remember the exact number, but back then the liquidation event, it was bad, but the percentage drop was far worse than comparing it to now. There were obviously a number of altcoins that reacted very negatively, dropping upwards to around 70% or higher. Some of them around 40, 30%, 20%, some lowered down to 10%. Some of them we were actually even going up, but those are a very small amount and very obscure altcoins. But when you start to look into this, obviously this is all going to be related to Donald Trump and his remarks regarding China imposing 100% tariffs beginning November 1st. But a very key factor of this is that 2 days before Trump's Truth Social post, one of the Bitcoin's oldest wallets began to open large short positions on Bitcoin and Ethereum to the degree of billions. And then a couple days later, Trump was warning China would face massive tariffs. Eventually, he came out and laid out the 100% tariff. Initially, the markets were reacting, but not to a great degree. And by the time we actually get to the post of Donald Trump and the 100% tariffs, we saw the S&P 500 falling by over 2%. This would be the sharpest single day drop since April. Bitcoin, depending upon what chart you're looking at, plunged somewhere to around $102,000 to $107,000, erasing weeks of gains in just a very short period of time within a subset of time within just a single 24-hour period. Like I said, altcoins, some of them were dropping 70% and higher, somewhere around 20 billion liquidations, potentially upwards towards total exposures, maybe even to 40 to 50 billion as well. Nearly $1 trillion was knocked out in less than 3 hours from the crypto market cap. But even more striking is that around 30 minutes or so before the official announcement from Trump on Truth Social, this whale that opened up this massive short position on Bitcoin and ETH doubled their short exposure. And what's even more, again, just it continues to get wild, is that as the market's crashing, this well is within, again, just a small period of time within a total 24-hour period, closing these short positions for somewhere around $200 million in profit. And really, I mean, again, we even saw a lot of depeggings with stable coins as well. And to kind of summarize all of this, again, I don't really see how this could be seen as anything other than some form of black swan event. Now, there are going to be people saying that they were calling it, so on and so forth. But I mean, for all intents and purposes, this really was essentially a black swan event. Nobody really saw this coming for the most part, and it was just unbelievably rapid and quick and very peculiar, pertaining to the what appears to be the illicit, manipulative nature of this. I mean, even with looking at during all of this, it was such a rapid and steep decline in such a short period of time that the people that were in these, leveraged or even over leveraged positions that got liquidated, their stop losses were not and could not be met because it was such an unbelievably steep decline in such a short period of time. And this is even, again, it continues to get more and more just bewildering, taking the fact to be that not only is Bitcoin sitting still at above, right now we're bounding quite well above $110,000, we're seeing the fear and greed dip to extreme greed, sitting at 24. Here we can see here still none of the bull market peak indicators here have triggered, still at a hold percentage of 100%. We look here on the fear and greed, as I was just mentioning, we're in a similar period of time. For example, right here is the cluster going back to around August, late August, sitting in these somewhere just anywhere below 50, recently hinting or hitting 27 and 24 for the first time, hitting that extreme fear zone. Again, this is comparable to here, this low, and here mainly in this low back in 2024. But as I mentioned last time I went over this fear and greed index chart, is the fact that during these periods of times as we were entering into these extreme fear and fear zones, Bitcoin was in a decline, it was in a downtrend. Same thing for here as well, but now we're entering these states of extreme fear and fear as Bitcoin's been in a gradual uptrend since going all the way back to around May of this year. And one of the things that I've been bringing up, I posted about it in the last couple of days, is that the people, the powers that be, the people, the institutions, the powerful, influential entities that exist at the upper echelon of the social hierarchy across the globe are really foaming at the mouth over this. There's still so many bullish structures intact, as I'll get to as I get into the actual charts for Bitcoin. Yet we're seeing the state of extreme fear hit, which, reasonably so, obviously, with everything that happened back on October 10th. But a lot of the times when we see things like this happen, when we see the floor reset, everybody is now just kind of, the sentiment not only is reset back to square one, but the trading floor as well. With all these liquidations, people completely got wiped out. Again, the floor has been leveled for everybody, and the people that exist at the top, these institutions and these highly influential, powerful, and wealthy people across the globe are now, as I said, foaming at the mouth. They're just ecstatic over the fact that not only liquidity-wise has everything been reset back to square one, there's this liquidity flush. We're going to begin the stage drama all over again as they did their manipulative workings behind the stage curtain during the intermission. And now it's what I believe to be borderline perfect time to, during this state of fear where you see most of the retail people, the small players, the minnows within the ocean of the market, panicking in fear, while you have these people that are at the top seeing this as a golden opportunity. And again, I think a big factor in this is the fact that, just to reiterate it because I believe it's quite important, is the fact that, again, we see these downtrends here leading into these states of extreme fear, but we're now seeing an uptrend leading into in a state of extreme fear, which to me is indicative of the fact that the fact that there's still so many bullish structures intact, that this is just it's a manipulative tactic, it's a scare tactic to reset this floor, to give the people at the top of the pyramid, a final opportunity to buy at these relative local low prices before the next move upwards towards $150,000, $200,000, potentially $250,000 and higher by sometime quarter four of this year or quarter one of next year. Now here, if we go into the Bitcoin dominance here, we can see on the top that as this happened, you can see the spike in the Bitcoin dominance, even though Bitcoin was going down somewhere around approximately 13-15% or so. We saw the altcoins have obviously their disproportionate reactions to the degree of 20, 30, 40, 50% and even higher for some. At this point, we've seen the dominance fall back down to this rough sideways range here. Again, not only did we see this in the actual asset charts, but we see here with the Bitcoin dominance an inverse spike up and then a spike right back down. So I think that over the coming weeks, my leaning here is, which it's definitely not an absolute statement, that we'll see some degree of V-shaped recovery, or it's also potential that this is just the beginning of an even more brutal storm to come. There have also been a number of other large shorts opened up by whales after October 10th. So again, we could just be at the earliest moments of an even worse drop to come. Perhaps, the bull market is actually over. Again, that's not my current leaning. I still think that there is, again, like I've said plenty of times, there's so many bullish structures intact. None of the peak indicators have flashed. If this is the end of the current bull run, then this is one to break every single metric that's ever been put into place over the last 15, 16 years. And as we can see here with the total 3 chart here for the market capitalization, there's this massive wick down here. We can see here with the others Bitcoin dominance as well, just same thing. Altcoins were clearly being brutalized and they were hit very hard because of all of this. And we may, again, like I said, we might just be at the early moments of this. It might get worse over the coming weeks. And even again, it's still an oddity, the fact that we're in October, we're on quarter 4, which quarter 4 has typically been, in the history of Bitcoin and crypto kind of in general, the best period of time for price appreciation as opposed to price depreciation. And we might see, for example, looking at the total 3 chart, we might see this major wick right here fulfilled a little bit more. We'll close candles closer down to these wicks that we see on these charts here, coinciding with an even more brutal time to come over the coming month or so. Here, if we look at the 4-hour chart for Bitcoin, we can see here the uptrend still intact, going all the way back to here late April. Ever since then, we saw here literally right within the last week of April, we set this support zone here, which so far as we can see going forward, it's lined up as support plenty of times since then, here, and most recently here as well. There were some brief closes, a couple of closes and candle opens below here. But at this point, as we're seeing the 4-hour price move up to the 200 EMA, the 50 EMA, and eventually potentially up to this descending resistance here associated with this liquidity flush here. Now, if we look here from the recent all-time high down, Bitcoin was down here at 15% from around the beginning of the liquidity flush, around 13%. So like I said, somewhere around 13, 15%, depending upon how you look at the drop. So we could see Bitcoin come up to this resistance, come back down to the support zone maybe. Again, let's find support, can you go higher? Or maybe we'll come down. Maybe we'll just fulfill this wick down here a little bit more, coming down to back somewhere around 107, maybe down to under 2,000. Again, like I said, it kind of depends upon what chart. Plenty of charts are showing different percentage drops, even for altcoins. Some of them will show, like 20, 30% decline. And you go to some other charts and they show a higher percentage decline than just a mere 30 to 40%. So really, at this point, it's going to be very crucial for this uptrend to be held, which is synonymous here with the 800 EMA as well. As I pointed out plenty of times, it's been a crucial approximate zone of support plenty of times throughout the current bull run of Bitcoin. If we look here at the 12-hour chart, again, we'll see here a higher time frame depiction of this uptrend still being held. The RSI recently, with its local low, has been more oversold at any point in time in this uptrend. So we're seeing in this uptrend a hidden bullish divergence on the RSI. The RSI is setting lower and lower lows, whereas the price is setting higher and higher lows. And even with the MACD here, it's going to reset itself back down to the lowermost zone as well. We can see here, same thing with the histogram as well, and even with the RVI, seeing something quite similar there as well. And looking here at the price for the 12-hour, coming back up, the 50 EMA is going to be the main thing here, also the 13 EMA as well, and generally just this yellow zone here. It's going to be very crucial. And when all this was happening, I was literally sitting at my desk and I saw Bitcoin drop down to this zone here of around $115,000, $116,000. I had been pointing that out as a potential retest zone. Hit that. I was making some posts about it and everything was looking, normal, looked fine. And then all of a sudden, the floor dropped out from underneath Bitcoin and nearly everything else. And we see this massive drawdown here to around 100, discharge showing $105.6 thousand. But clearly, quickly, just as, arguably as quick as it all happened, there was this around, depending on how you look at it, about a roughly, 40, 50% recovery of this entire decline in price. So again, like I said, either we are going to see some rejection somewhere around here in this zone, back down into the uptrend and continue upwards, or we'll see a fulfillment of this wick back down around $105, $107, $102,000, find support here. Or this is perhaps just the beginning of something worse. Maybe we come down to here the 800 EMA somewhere around $98,000. That would also be roughly approximating the 382 here as well for the Fibonacci extension used on this chart. If we look here at the daily, again, we'll see just another slightly higher time frame uptrend here, still being held. 200 estimated moving average here is going to be crucial to hold somewhere around 108.4 thousand. We're seeing the RSI here set a rough horizontal zone as the price is ascending. So we're on this chart on the daily now seeing more of an exaggerated hidden bullish divergence. And the same thing roughly could be said for these other indicators. The RVI here has been moving back up into this upper zone, so we could potentially be seeing some upwards volatility here. If we do see this V-shaped recovery, and I'll use this 12-hour chart to demonstrate this so far, and as this is all happening, I pointed out the fact that we might be seeing the first half of the V-shaped recovery. So we're seeing the decline, and now we're seeing a recovery, and we're about roughly halfway into this recovery. And now really the dilemma is, the question is whether or not we're going to find rejection here at these key levels down to fulfill the wick a little bit more here, or continuing to go lower. And, you know, we could be seeing a V-shaped recovery here by around sometime leading into around maybe October 17th, 18th or so, back upwards towards around 122, 123,000, all for Bitcoin just to continue to go higher here. Lining up with the sentiment I was conveying earlier with this liquidity flush, massive liquidations, resetting the floor. So the people at the top of the pyramid that are manipulating the market, and this won't be the last time this happens either, will have their final opportunity as, you know, disproportionate controllers of the market to get good buy-ins, get good positions as Bitcoin then starts soaring to $130,000, $140,000, $150,000 and likely, I believe, higher over the coming months. And here as we get into the 2-day, we'll see here again, there's this broad uptrend zone here with the upper bound lining up with the candle closes, here the lower bound lining up with these wicks. What's interesting too, the structure of this uptrend here is that this wick back on the around June 22nd was the same trend line that we see this wick here for the liquidation event here plummet down to. So we can even see some kind of structural similarities here as well. So not only was this a kind of an anomalous black swan event, but it did to some degree, it's obviously here still respecting the uptrend structure here, which I think is a good sign. Moreover, even on top of this, we can see here on the 2-day chart this uptrend zone here that is characterized the lower bound of the entire bull market, which is roughly synonymous with the 200 estimated moving average here. We're seeing the price enter this zone here, albeit now with just some wicks, so we could potentially, again, like I said, go a bit lower, maybe down to around approximately $100,000. Might even test with some wicks down the 200 EMA somewhere around $97,000, $98,000, which this is something I've been pointing out as a potential for the last number of weeks in these Bitcoin update videos, that until we see Bitcoin lose this horizontal support here somewhere around approximately $80,000, I do not think that there is any significant reason to be stating absolutely and dogmatically that the bull run is over, because this right here, as I pointed out, we could potentially be seeing an ascending double top or M pattern here with the horizontal floor set at around 80,000. If we lose this here in price, we might come back up to retest it, find rejection into further lows, hitting into 60,000, maybe even around $50,000. That would then be initiating around 43-45% drawdown from top to bottom in the price as well, lining up with historical criteria of significant enough drawdowns, which is that 43 to 45% threshold. When we see that happen in Bitcoin, looking at its all-time history, typically that is lined up with the beginning of bear markets and prolonged downtrends to come. So until that happens, again, it remains the same, that for now there's plenty of bullish structures intact, despite the significant amounts of panic and fear that have been instilled within the market and the market participants, specifically the retail and smaller players across the board, given the events that have transpired over the last few days. Even if we look down here at the derivative indicators with the RSI, it's quite oversold, sitting roughly around range around 45 or so. Not heavily oversold, but so far, I mean, we're still seeing a building up here of this RSI. We're still setting, despite the liquidation event, I mean, there's still higher highs here, you can see, or higher lows rather. We see this first low here, higher low here, and then a higher low here, albeit there was this wick that went lower. But overall, we're still seeing a pretty good recovery so far. We're still seeing these higher lows. We're still seeing, you know, we see a high range here, then a high range here, while the RSI could potentially be showing this building, its structure that's building upwards to break this 618 threshold here and line up with an increase in volatility and upwards pressure that has characterized the past impulses, you know, from 25, 30,000 up to 75,000, 50,000 up to around $108,000 and higher as well. Even here on the 2 days, we can see here that the RVI down here got roughly as oversold as it was back when the price was somewhere around $84,000. So again, we're seeing the price sitting at approximately $110,000, just generally above $100,000, and we're seeing a number of these indicators across these different time frames resetting themselves back down to levels that weren't and have not been seen since Bitcoin was sub $100,000. And the fact that we're seeing these states of extreme fear and fear at the same time with this, you know, essentially black swan event, this liquidation event that is comparable, albeit worse in terms of liquidation, to something like March of 2020. And what happened in March of 2020 would have been clearly, as you can see going back here, there's not too much data on this chart, but this here was the drop of March 2020. Right before it, we saw a total, yeah, like I said, somewhere around 60 to 70%, specifically around 65% according to this Binance chart. And then what happened immediately after? We see a V-shaped recovery into this parabolic move upwards to $64,000, $65,000. And we can see here that this event here has been compressed literally just into a single weekly candle, whereas going back to March 2020, it was around, you know, 3 or 4 weekly candles, so about a month there of less significant liquidations, but more significant and intense percentage drawdowns in the price. So again, and we're also still, with this recovery so far, sitting above the 13 EMA, which is good. Still totally possible, again, to come down on the weekly chart here and test the 50 EMA in its band, which would be anywhere from around 106,000, which is, for all intents and purposes, already been met, down to as low as around 94, 95,000. Again, like I said, lining up with the ranges of potentiality to the downside that I pointed out on the 12-hour and the daily, the bi-daily. So, like I said, there's still plenty of room for downside here. There could be far more brutalization to come that might still be associated with these massive short positions that are being opened up by, you know, long-term holders of Bitcoin and well wallets as well. What's also interesting is the 0.5 of this trend-based Fibonacci extension from the low of, let's see here, the low of August, around August 26th, to the high around December 16th, this is 2024, to the low of all around the first week of April of this year. And so far, this 0.5 has held up as rejection here, then we broke up to the 618. And so far, this 0.5 has acted as crucial support. It was borderline precise support for the wick of the liquidation event. So this sits currently at around $107,000, $108,000. So that's also going to be important to hold. If we start to see some weekly closes below this, it might be indicative of a further move, again, like I said, down to the bottom bound of, or the lower bound of the 50 EMA band, somewhere around, like I said, $94,000, $95,000, $93,000. We see the next zones here for the 786,854, around 130 to 135,000. The next most notable zone would be the 1.236 to the 1.272, around 172 and 176,000. 1.382 sits here at around 189,000, 1.608 around 220,000, and 1.786 around 245,000. And so these are going to be some upwards price targets I'm looking out for, assuming the fact that Bitcoin actually continues to go higher here. These ascending supports, well, they're resistance / support at this point, with mainly being resistance. Actually, now that I'm looking at it, there's been really, like, outside of this brief support here, mainly been resistances. And this, depending upon here, is going to be lining up roughly with the 0.786 to 0.854, somewhere around pushing 140,000. The upper bound here is going to be somewhere, it all kind of, again, depends upon when these get hit, if they get hit, but somewhere around 170, 180,000 for the upper bound. So breaking these will be quite crucial in seeing Bitcoin actually push upwards towards closer to $200,000 and higher over the coming months. We look here at this weekly chart, we can see some SMAs here laid out. We'll see the yellow here in 50, orange here is the 100, and black here is 200. A crucial SMA here is going to be the 50 here in yellow, as you can see that going back to here in the distribution range period of the prior bull market top zone back in 2020. The 50 SMA was support from July to November 2021, hitting 69,000. We saw the price come down and approximately find support along the 100, comes up to the 50, finds rejection, moves all the way down into the bear market here. Then we see the price recover, hit the 50, find brief resistance, breaks above the 50. Here you see going sideways around 25 to 30,000, finds rough support along the 50. And then really the trend here is that we see Bitcoin continue in the bull market, making these impulses, come down, test to 50, find support. Same thing here, test to 50, find support. And we're getting close to that as well. This is going to be lining up with the 2-day uptrend that I mentioned and further uptrends that I'll get to as well in these higher time frame charts. But currently the 50 SMA sits at around $103,000, $102,000, has not been precisely tested just yet. So again, we could continue to see a little bit more further downside here and test this more solidly before we see Bitcoin actually come, let's for example, come down here and then find a bounce to go higher. The 100 SMA sits at around 80.7 thousand, so this is lining up with the horizontal support here of the ascending double top or M pattern here, that if this gets broken, I think this is my final line in the sand. If this here gets broken and we see Bitcoin continue to set closes below here, especially on the weekly and higher, then I think that this will be the final but also the most solidifying technical data point pointing to the earliest moments in the true beginning of a bear market ending the current bull market. And then even below that, we see here that the 200 SMA here sits at around 54,000. So where I would be expecting support to come into play in general, if I pull up the drawings here and get rid of those SMAs, this is kind of what I believe, or at least this is what I'm leaning to. Obviously, who knows if this is going to happen, and only time will tell. But we see this purple zone here. I think this is the next bear market low range. And this is if in the case we see Bitcoin continue to go higher here, at least upwards towards around $150,000, $160,000, $170,000. But I do think there's a good likelihood that it will go higher than that, at least around $200,000, $205,000, $210,000 by sometime end of this year or Q1 of 2026. And that's in accordance here with this uptrend here, as you can see here that I've already gone over. There's this ascending resistance zone that goes all the way back to the double top here of 2020 to 2020, or just 2021. That could be, again, we're seeing this, we saw this double top back here leading to a bull market. Now we're seeing another ascending double top within the same range, which again, you know, perhaps for all intents and purposes, it's totally likely that this could be the earliest moments of this double top pattern, this M pattern, once actually broken towards the downside here of this horizontal support, telling us here that the bull run is actually over. But for me, you know, if you look at it in the sense of market makers and these, you know, higher institutional big players, these big fish within the ocean of market trading, to me, it just doesn't make much sense to see a pattern like this replicated again after such a, you know, relatively short period of time. We saw this double top pattern in the prior bull market to end it, leading into the bear market. To me, it just doesn't make much sense for them to use the same pattern again in the next bull run. It's just kind of a sense of too good to be true, and it's just too easy to actually be something that plays out. It doesn't throw a wrench really in the context here in the system. I think that it would make more sense for, especially with the liquidity flush that has happened recently, to see in the state of extreme fear that a lot of the market is in and the panicking, to then see, as a lot of people are exiting and have been liquidated, a massive run up to the upside here. That to me is just what makes more sense. On top of that, we can see here these green measurement zones or the first leg up in the current bull market. So if we're still viewing, as I've said plenty of times in past videos, this move here for Bitcoin, or this overall bull market structure, is a 5-stage impulse, where we see here this first move, this would be 1, then we see 2 here, then we see 3, then we see 4, and then up here would be 5. So we're seeing this impulse like wave structure. And this first leg here at the beginning of it was around 16 bars. Second leg here was 33 bars. So we're seeing a doubling here in time. So if we see this trend continue and we see a double here, 33 bars, then somewhere around 66 bars, that would just put Bitcoin topping out at sometime during December, which would line up with the historical trend of, for example, going back to 2021. Given the double top here, it kind of muddies the conclusion here, but $69,000 was hit in November 2021, so quarter 4. If we go back to 2017, you can see here on 20,000 hit in December. If we go back to 2013 here, the end of phase 1 of cycle 2 was hit in, again, November. And going back to the end of cycle 1, it was hit in June. So, but for the most part, as I'm sure a lot of you are already aware of, a lot of the times we can see here, phase 1 ended in cycle 2 in quarter 4, specifically December. Phase 2 of cycle 2 ended in, again, quarter 4. We see the first peak of phase 1 of cycle 3 here ended, within the range of March to November, but it really ended at terms of price all-time high here at 69,000 in quarter 4. It's also interesting again to point out that this here being the bull run of phase 1 of cycle 2, there is again these 2 peaks here of ascending structure. This first peak was in around April, March. Second peak was around November, December. And that's what we see here with this first peak here, March, April, November, December here. So it makes sense to see this second peak overall, phase 1 of cycle 3, to end sometime around quarter 4, sometime around November or December. And given the nature of the extension of the bear markets and the bull markets, we could see it again bleed into sometime maybe quarter 1 of 2026, whether January, February, March. I'd have to imagine it wouldn't be too extended past 2026, but who knows at this point with just how drastic the progression of Bitcoin has been within this current bull run, with the institutional adoption, the spot Bitcoin ETFs, and plenty of the other fundamental aspects that could be brought up to support just this paradigm shift really in Bitcoin that we're seeing. And really to put the capstone here on this chart, so if we see, leaning to what my bias would be, is we see another move up here somewhere around the 1.5 to the top of this channel that characterizes and structures the current bull run. We see a move up here, then we see Bitcoin crash down here to this purple zone sometime, I would have to say, setting the first low maybe late 2026 at earliest, but probably pushing into sometime 2027. Then I think we'll see a significant sideways accumulation range here leading into late 2027, early 2028. Now, if we look back at each of these bear runs, again, like I said, the bull markets are becoming less bullish over time and the bear markets are becoming less bearish over time. The prior bear market was around 77%. From 2017 to 2018, early 2019, it was 84%. Back from 2013 to 2015 here, it's around 86%. Going back to the end of cycle 1, beginning of cycle 2 with phase 1, 93%. So we're seeing 93% or 94%, 86%, and 84% here, 77% here. And now the trend indicates that something below 77%, I'd have to imagine at least 75% or lower will be what is met. So if we see Bitcoin push up to, I'll take it from approximately 200,000, and then a drawdown of pushing 70% would put us right here in the lower zone here of this purple zone that I'm pointing out as being the next bull market accumulation zone or low zone of a sideways nature, because the bear market rather that we're entering is going to be the third iteration of the phase 2 bear market, which is what we saw here in cycle 2 of Bitcoin, where we'll see this, the brunt of the bear market where it's really heavily, significantly going down. Then we'll enter into an M-based sideways accumulation here. We saw something again, we see the brunt of the bear market here, then we see an ascending M-based accumulation here, leading into this bull run up to 69,000. Again, we see the brunt of the bear market here leading into a descending M-based accumulation zone here into the current bull run that we're in. So I believe as we're heading into, or we are entering into the final stages of the bull run of phase 1 of cycle 3 for Bitcoin, as we head into cycle, or rather phase 2 of cycle 3, we'll see again the brunt of the bear market here leading into this purple zone, sideways accumulation M zone, and then eventually we'll see the bull market then pick up probably sometime late 2027, early 2028, maybe a bit later, but I think roughly around that zone. It also might be extended even further than that as well. Again, like I said, we haven't really seen, for the most part, most of these bear markets so far, depending upon how you take it, here from 69,000 was around a year, 54 bars. Here would have been 85 bars. This one here was, again, 54 bars. So that's around a year as well. So we see here again, around 60 bars, 93 bars. So that would be more synonymous to the longer version of 2021 and its bear market. And then here, obviously, this one's going to be quite short because it was in the infancy stages of Bitcoin. But again, we're seeing kind of the extension generally of these, again, like at these bull markets and these bear markets, as I've said. So we could potentially see upcoming, which I think is going to be like this regardless. It depends upon how intense it's going to be. The upcoming bull or bear market, I think, is going to be one of the most brutal and prolonged bull markets that Bitcoin has seen, which might take it into, we see Bitcoin spike up here and it might come down to this zone, and then it might sit here leading into maybe even late 2028, early 2029, and by 2029, that's when it's finally starting to pick up, and then we don't see Bitcoin set a new all-time high until around 2033, 2034. So I think then reaching somewhere around $1 million. But obviously all this is quite, grandiose speculation, although it is, if I may say, grounded in a pretty significant degree of technical data points and structures going back across the all-time history of Bitcoin. Now, if we move in here to this 2-weekly chart again, we'll see the accumulation distribution of the open interest money flow index. This is an all-time high, and this is one of the ones on the charts that hasn't been flashed yet on top of the 30 that were shown earlier on the coin glass chart. You can see here the pi cycle high hasn't been met. We see here the RVI indicator I've gone over plenty of times has not been met either. And this is also one of the reasons why I believe this purple zone will be met, because going to the RVI all-time high and all-time or bull market peak and bear market low indicator here, we can see that each and every single time the bull market peak arc is having an ascending structure here every single time leading into our current ongoing arc, and the RVI prints a descending structure here. So we're seeing a hidden bullish divergence here, and for this to continue to play out here, if we do again we see eventually some sort of peak on the RVI, then it comes down and sets the hidden bullish divergence that points out the bear market lows. Like for example, back here, it was synonymous with the pi cycle low indication. And for this to continue for this trend and this pattern to be respected, Bitcoin cannot go below approximately 59,000. We might see some wicks down to that or a little bit lower, but it can't close below basically 60,000. And going back to this zone, 60,000 is the midpoint of this purple zone here. So again, that factors in with the bear markets being less severe over time as well. That lines up with seeing somewhere around 75% or lower in a bear market retracement. If you look here at this monthly chart, this is demonstrating really kind of the whole 4-year cycle period associated with the halvings, where we see the first Bitcoin halving here, November 28, 2012, second, July 9th, 2016, the third here, May 11th, 2020, and the fourth, most recently here, April 20th, 2024. Yeah, we can see that these build up, these expansion phases leading into, so these red zones here leading into these green zones, the parabolic bull market period. There's been a trend, most notably here, of focusing on the parabolic portions here, where we see 12 bars, 17 bars, 17 bars. So we are seeing an increase here, like I said, the lengthening of bull markets, and then from here, from 2017 bull market here, the parabolic portion was the same here. Depends upon how you measure it here for 2021. Structurally and on-chain data, it supports that the all-time high here is at 69,000 or 64,000 rather, back in around March, April, and May of 2021, as opposed to quarter four of 2021. So it depends on how you take this. If you take it from 64,000, we're seeing 12 bars, 17, then 12 bars. If you don't, we then see 17 bars. So, but also, you know, the general rule of thumb, I think, is to expect it clearly that the extension of this is what is happening. And I think that's very clear with the fact that this bull run so far has just been very lollygagged and gradual. I think it's very clear that this is a prolonged and extended bull run that is yet to see its final parabolic thrust, that is yet to see its most explosive thrust in the current bull run. Very comparable to the ending moments of 2017 and the ending moments here of 2013. And even more so here with these expansion phases here in red, we see 12 to 18 to 16 to 16. So obviously we see here an increase and then there's a decrease, but it's a, you know, relatively negligible decrease here for these expansion phases. But like I said, what's most important here is the fact that we're seeing these bull runs generally increase over time. And if we take some form of increase upwards to 21 bars, we'd see a top for Bitcoin set by around the beginning of next year. You know, if we see obviously at this point we can't see 17 because that time has already elapsed. We can't see 18 unless within this current month we see Bitcoin set its all-time high and then begin its bear market. If by 19 bars, we'd see Bitcoin top out by November, 20 by December, and then 21 by sometime around before the end of January. So I think that's a more likely, at this point, late November, sometime December, maybe pushing into January, February of next year is what is more likely in this regard. Also, we can see here that the Bollinger Bandwidth is sitting at 94. It's still at its lowest state in history. The Bollinger Bands are their most compressed in history, as I pointed this out recently. This is a very important thing to factor in because obviously at the end of the day, the compression built up due to the convergence of the Bollinger Bands is not indicative that it's going to be a bullish release of pressure or a bullish depressurization event. The Bollinger Bands convey ambiguity. It is just simply saying there's a lot of pressure built up and it might go up, it might go down. But the historical precedent set, as I elaborated more on in past videos, that every single time we see the pressure of the Bollinger Bandwidth hit these oversold, or not oversold, but these historically low zones. So for example, here back in April 2016, towards the end of this expansion event here, or period here leading into the parabolic period here, we saw the same thing right around here in this zone leading into 2021 highs. Saw the same thing here around 30,000 or so back in December 2023. Bitcoin's only gone up since then. So the historical precedent here conveys that just about every single time we've seen these Bollinger Bands get insanely compressed, it's been before a massive bullish depressurization event as opposed to a bearish depressurization event. And moreover, you can see here, which is one of the crucial aspects of this chart, you can see that these depressurization events are divergences. We see here, these great divergences here. We see these Bollinger Bands have these major dips and then it converges back upwards here. We see the Bollinger Bands are highly compressed. We have, again, yet to see this depressurization event happen, or we see this first leg of the divergence, which, as you can see, every single time this happens, the first leg of the divergence here lines up with these parabolic portions of the bull market. We see the same thing here. The first half of the divergence and the depressurization event is bullish, and the same thing happened here for 2021 as well. So I expect that the same thing is going to happen here as well, rather than basically on the contrary, what we would see is the beginning of this depressurization event, the entire first leg here is bearish. And even when the divergence ceases and the convergence begins again, that's also going to be bearish. So we would, again, just enter a terrible, 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 brutal bear market to the likes of which Bitcoin has never seen, which is totally possible, but I just don't think it's the most likely scenario. At the end of the day, factoring everything in, again, still have not yet to see the historical Fibonacci zone met with an approximal zone of the 2.7 or the 2.272, which sits somewhere around $212,000. Again, still one of the big things, big reasons why I'm expecting higher price targets, because this is a historical trend set by the Fibonacci extension going all the way back to the end of the first cycle of Bitcoin back in June of 2011. It also predicts the upcoming bear market to bottom out sometime, or somewhere around rather, the 1.5 to the 1.618. As you can see here, it lined up with this zone, 1.618 to the 1.5 here. You can see here happened as well, and the 1.618 to the 1.5 here sits at the range of around 49,000 to 60,000, again lining up with the RVI hidden bullish divergence pattern that I pointed out here, and lining up with this weekly purple zone that I pointed out here on this chart. So again, plenty of reason, and a viable reason at that, to expect from really 3 and more really main vantage points of analysis that Bitcoin still has more price discovery to make, which will then bottom out somewhere around approximately $60,000 or so. I think likely around, at earliest late 2026, definitely probably sometime within 2027, but at latest 2028. And then going into maybe late 2028, early 2029 is when we then start to see to go back here, since we'll in the upcoming bear market be seeing the third iteration of the phase 2 bear market here, for example, and then leading into the bull market of phase 2 here, this being phase 2 of cycle 2, the most recent iteration of this phase that we have. We'll see again the brunt of the bear market, the brutal period of it, then we'll see a sideways M-shaped consolidation. Then we'll enter the expansion phase here up to the prior all-time highs, and then once we break those prior all-time highs, we'll then see the parabolic portion of the bull run begin. Now lastly here, looking at the end-all be-all chart here on the 12-month, again, I know I've gone over this plenty of times over the last number of months, but this is the highest time frame you can get to, and it's also alluding to the fact that there is still more price discovery to be made with the current bull run for Bitcoin. And even the same thing would be said for alt season, as well as we're entering these final stages of Bitcoin in this final thrust and impulse towards the upside. This is going to be presenting the premium and the primed opportunity for altcoins that have been up until now in expansion phases to finally enter into their, that nostalgic, euphoric, ecstatic, parabolic phase of alt season. And we're seeing here that Bitcoin is on this third year, has yet to reach the yearly uptrend, but it also could be saying that the bull market is over, especially in the case that basically every single metric and every single superimposition of models, technical analysis that could be projected onto the charts of Bitcoin could be broken. But again, really the final point I'll make here to end this video is that when we have entered into the institutional era of Bitcoin adoption and blockchain solution adoption abroad, to me, all of the models and patterns and trends up until now, prior to institutionalization and this era and this paradigm, to me it would make more sense for all of these models, patterns, and trends thus far to be broken and deviated towards the upside, to where they would be invalidated in a positive manner rather than being invalidated in a negative manner. In the case of, we're going to see all of these patterns, trends, and models broken to the downside, and we'll see none of these. Well, basically, it's either we have a notably bullish bull market that breaks prior models, patterns, and structures, as opposed to a context of seeing a lackluster bull market that invalidates all of the models, patterns, and structures in a negative sense, to where we didn't even meet the typical uptrends we should be expecting to be met. We don't meet these temporal patterns here of around 3, mainly 3 years, but sometimes potentially 4 years as well for the 12 or the yearly progression here on the price. But again, really, I just don't see why we would with all of this institutional adoption, and clearly there's more manipulation. That's as we see further and further institutionalization and really even globalization of Bitcoin, which is really kind of its end goal. But hopefully it goes down the proper path instead of the path of, you know, complete and utter lack of wisdom and goodness associated with adoption of Bitcoin as a overall technology and a revolutionary paradigm, not only within economics and finances and the monetary system, but also when it just comes to general societal relationships, peer-to-peer relationships, and the kind of just the interconnected mesh network, the tapestry that is, you know, intercontinental, you know, within your own nation state, you know, interaction between civilians and government and things along those lines. But that was really all that I wanted to talk about and update in this video. Again, as always, none of this is meant to be financial advice. I am just somebody who enjoys uploading his opinion and his take on the internet, and really my main goal is to cultivate constructive dialogue within a community, so as for all of us to learn from each other and continue to flourish and prosper together. But as I said, that was all for this video. As always, I hope you all enjoyed, and I hope you all have a wonderful day.